The Street's #1 chips analyst says tariffs are Trump's preferred way to boost the industry rather than stimulus like the CHIPS Act. Joining us now is Bank of America Securities senior semi-analyst Vivek Arya. Vivek, glad to have you here. I was very surprised that this area was the worst hit of the market today, with Nvidia down 5% in the morning. Why?
Thanks, Kelly. Thank you for having me. I think the industry is caught up in this, intersection of all the geopolitical nervousness. It's the DeepSeek concerns from last week. And it's an industry that has done very well over the last few years. So I would imagine that a number of investors own it as well. There is a fair bit of retail interest. So I think that naturally enhances the volatility of the industry. But let's take the news that has come out from tariffs. I think the cyclical part of the industry is exposed to it, as you said, indirectly. If, let's say, because of tariffs and the friction in the supply chain, if there is any reduction in volumes of cars and other industrial equipment from Canada and Mexico, there can be a concern. But when you look at the secular part of the industry, which has to do with the application of artificial intelligence and the use of servers, most server production has shifted to Taiwan, right? Some to Mexico. I think the customers who buy a lot of these products, for them, this is very mission critical to have in their cloud infrastructure environment. So we are assuming that the impact of this is notable in the near term, but should dissipate in the longer term.
Right. So do you think the near-term impact has more to do still with kind of the DeepSeek hangover? Or do you think it's really that people go, look, what happens if the president starts really tariffing Taiwan-made semis, as all of them are?
Right. I think that, look, semiconductors is a global industry, and there's a lot of kind of pools of excellence, right? There are certain companies who design these semiconductors extremely well, certain companies that manufacture them very well, certain who package them well. Japan is a great source of chemicals. So it's a global industry. It relies on inputs from many different companies coming together. So any kind of friction is not good for the industry. But we should, remember that this friction is nothing new. Back in the first term, remember there were a lot of restrictions that were put on the Chinese ecosystem, on Huawei as an example, and semiconductors over time powered through that. So our assumption is that this is another one of those times where when you do have restrictions put in this ecosystem, but the global demand for chips that enabled new markets and applications, whether it's in cloud computing or automotive or industrial automation, I think that secular trend does continue over the longer term.
Sure. And a lot of the more bullish, analysts and experts have said, look, everything that's happened with AI development and innovation, whether it's DeepSeek or what have you, is only going to increase the need for these highly complex chips going forward. So here's my question, Vivek. Nvidia is down 23% from its recent highs. Is it going back to 140, or are we going to laugh to think it ever was a almost $4 trillion company?
Sure. So first of all, Kelly, I think we are big believers in the fact that if one makes computing more efficient, we will use more of it, right? If you look at the last 8 years or so, the capability of NVIDIA chips has gone up by a factor of 1,000 times, right? Since 2018, the capability of their chips has gone up by 3 orders of magnitude. In that time, the revenue of their data center business has gone up by 300 times. Right? So just because the chip is made more efficient, or there are other efficiencies that come out because of software or operating systems or large language models, I think what history shows us is that there is enough demand in terms of new applications that is able to absorb.
Nvidia was perhaps the stock that most reflected the artificial intelligence, AI craze of the previous year. Tech businesses purchased the semiconductor chipmaker's AI products for billions of dollars, which helped the company's bottom line. By the end of January, Nvidia's stock had increased by almost 90% over the previous 12 months. However, Nvidia shares fell 17% after Chinese startup DeepSeek said on January 27th that it could create a large language model, LLM, for less than $6 million, a small portion of what American corporations spend. Although the price has now rebounded, it remains below the January 7th 52-week high of 153.13. Does this mean there's a chance to buy? Or does DeepSeek pose a danger to Nvidia's profitability in the future? Continue reading to find out if Nvidia is still a good long-term AI investment. The startlingly cheap pricing of DeepSeek's AI raised worries that Nvidia would lose business. Others may build the AI technology without Nvidia's expensive goods if one company could do so at a low cost. However, for a number of reasons, Nvidia is unlikely to be much impacted by the Chinese startup's success. To begin with, DeepSeek might have used limited advanced AI chips. The possibility is being looked into by the U.S. Commerce Department. Furthermore, OpenAI, the company that created ChatGPT, charged DeepSeek with using OpenAI's data to create its program. Since AI needs mountains of data to complete jobs, DeepSeek's improper usage of OpenAI's information could make it more difficult for others to replicate LLMs at a low cost. In addition, China and the United States are competing for primacy in the digital sphere. As a result, the sale of AI chips to China was restricted. More regulations might be in the works following DeepSeek's entry, which would make it difficult for other Chinese businesses to create affordable LLMs. DeepSeek may possibly be outlawed as a result of the rivalry between the United States and China. Federal organizations, including NASA and the U.S. Navy, have previously prohibited the use of DeepSeek AI technology. Due to privacy and security concerns, TikTok, another Chinese startup, was banned by legislation in the United States. President Donald Trump postponed the ban's execution, but unless Congress changes its mind or TikTok is acquired by a U.S. company, it will eventually take effect. It makes more sense to prohibit DeepSeek and other Chinese AI businesses than TikTok, considering how much AI depends on data to operate. There are other options besides a U.S. prohibition. At the time of this video, DeepSeek was prohibited in Italy. Other countries' moves would reduce China's AI competition. These elements suggest that Trump's recently unveiled Stargate project, which involves investing up to $500 billion in AI infrastructure, will go ahead according to schedule. Among the businesses involved in the project is Nvidia. On January 31st, Nvidia CEO Jensen Huang met with Trump to talk about AI policies. With that degree of access and influence over U.S. AI policy, Nvidia is well positioned to gain as regulations change. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Kat will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at stockbrokers.com. Great to see you both. Jessica, we're in the midst of earnings season. You have a new president, tariff talk, more on jobs. How are you feeling overall on the market? Did you see a big buying opportunity when we sold off, and will you buy on dips going forward?
Yeah, absolutely, Nicole. I think that big sell-off was, well, there was a couple. One, because of tariffs. We did a really great study where the talk of them causes a lot of uncertainty and volatility. I personally believe that if we have any tariffs implemented, we also have to look at the strength of the dollar in addition to just the impact of that. And then, of course, the second component is the sell-off in technology because of DeepSeek. That I do think was overblown and was a complete buying opportunity. So I guess, like the Fed, I want to assess the data. There is certainly uncertainty, but what is certain is it's earnings season and technology looks like it's set to prevail.
Yeah, DeepSeek a week ago. We really have had a time of it so far in 2025.
Yeah, we have.
Let's get to, we really have. Let's get to a name like Nvidia. Some of your thoughts on where Nvidia could be headed. We just had Stephen Orr on, who said he's still a fan. It's at 119 today. It traded down recently, throughout this week and last week too. Some of your thoughts.
Yeah, I think we have to realize this overbought or overvalued type of tone that we're having with the market is that we have a technology heavy market, and Nvidia is a big component of that. So when it sells off, it's something to pay attention to. Fundamentally, I think the investment thesis is still there. I am absolutely a fan of Nvidia. Like I said, I think DeepSeek was completely overblown. There's a lot of other factors that go into it. But the reason why I wanted to bring it to your attention today is it's entered a bearish trading cycle. I do get very technical on a longer term, and I like to look at 2 to 3 year charts. And I pull the 13, 26, and 40 weekly moving averages. Those represent 1, 2, and 3 quarters worth of pricing. So from a fundamental view, when there's earnings follow through, I expect to see that with price follow through. So the way that we can depict that from a technical bay is with the 1326 and 40. We're below that, which means it's a bearish trading cycle until we clock a weekly close above that. So the first line of defense that we have to overcome is the 40 weekly moving average around 125. So conditionally bullish, I would set a conditional trade to buy once we have a weekly close over 125.
Wow. All right. So not necessarily the bearer of bad news, but a little heed the warning.
After all, Nvidia is already regarded as the leading supplier of AI chips. Its third quarter fiscal year, which ended on October 27, 2024, saw record sales of $35.1 billion because to its reputation. When compared to a year ago, this is an astounding 94% rise. In addition to its revenue increase, the company's other financials show that its firm is doing well. With its Q3 net income of $19.3 billion, it outperformed the previous year by 109%. $38.5 billion in cash equivalents, and investments made up the company's $96 billion total assets in the Q3 balance sheet. Nvidia's cash reserves alone exceed its $30 billion in liabilities as of the third quarter. Furthermore, Blackwell, the chipmaker's most recent computing architecture, is selling well. We are on course to surpass our prior Blackwell sales projection of several $billion, CFO Colette Kress stated during the results call. Additionally, the company is not just an AI company. Computers, game consoles, robots, and the automobile industry, where cars are becoming more and more digitally capable, all employ its chips. Nvidia is well positioned to thrive for years to come thanks to its solid financials and revenue growth, the widespread use of its products, and the wide variety of uses for its chips. As a result, its stock is a great long-term investment in artificial intelligence. It's also a fantastic opportunity to purchase shares. The reason for this is the value of Nvidia's stock. The price-to-earnings (PE) ratio, which indicates the amount that investors are prepared to pay for a dollar's worth of earnings, is shown here. At the time of this video, Nvidia's PE multiple is at the lower end of the range of where it has been during the previous 12 months. This suggests that, in comparison to earlier times, the company's shares are now fairly priced. Ahead of its fiscal Q4 results report on February 26th, now is an excellent opportunity to purchase shares of this top AI chipmaker because of its high stock valuation and to stay informed about the latest developments from Nvidia and the ever-changing stock market. Consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Let's see what Rick Ducat has to say. Rick?
Yeah, definitely took a hit recently on that DeepSeek news. And while we did not yet recover to those previously rather lofty levels, we can see that we did find some support at what looks like an important point. Take a look back here. You can see this red candle here that marked a low close during our rally here that took place within this blue ascending rising wedge type shape, And we can see that that low point, this green line, that's about where we bottomed out recently. That also happens to line up extremely closely with our purple 252-day exponential moving average. So Nvidia held the line at our long-term most significant moving average that we follow. So that's a good sign for the bulls so far. I'm not saying it won't reverse and go through that in the future here. I'm just saying this first kind of initial test seems to have gone okay for the bullish crowd here. Now, though, we would want to recapture some of these lost levels here. Perhaps first taking back this white trend line that was broken going across the lows. RSI also not really cooperating quite yet here, still below that 50 midline here, but making a higher low than we previously did. So now if we were to look at our volume profile and standard deviation studies, we can see very, very heavy volume during the recent downswing here. Many volume spikes where volume was at least 50% above in this case, the 30-day simple moving average of volume here. But we can see a volume node right about here near 120. That's about where we are now. So this is an important point to work through. Low point here once again, 113. And then around here as well, -2 standard deviation channel matches up with an old low near about 103. To the upside, fill the gap, 141.88. Then the old highs, 153.13. Those are the upside levels to consider.
Okay, thank you for that. You know, it's interesting because you still have the wild card of Trump tariffs and how that.
The stock of Nvidia, which recently joined the Dow Jones Industrial Average, saw the strongest performance last year, rising 171%. The titan of artificial intelligence, AI chips, had an amazing year. It prepared the launching of its new revolutionary Blackwell architecture, announced record income, and entered this renowned benchmark. However, Nvidia's momentum has sputtered to a halt in recent days, as the stock has down almost 15% during the last 5 trading sessions. What caused the drop? The AI model was taught for a fraction of the money that large U.S. tech corporations have been spending, according to a Chinese startup called DeepSeek. The theory is that these Nvidia clients may have been overspending and may change their investment and strategy in response to the DeepSeek announcement. You might be asking if you should purchase Nvidia stock before February 26th in order to take advantage of both short-term and long-term gains, since the company is on its way to its next major catalyst. Here is what the mounting evidence indicates. Let's start by briefly reviewing Nvidia's meteoric ascent to prominence in the AI industry. Once a leading supplier of graphics processing units, GPUs, to the video game industry, the company developed the CUDA parallel computing platform to assist realize the potential of the GPU in other industries. Even while Nvidia still caters to the video game industry, artificial intelligence is now the company's main focus. 87% of its current revenue comes from its data center operation, and revenue has hit all-time highs, increasing by double or triple digits every quarter. This is because of the company's whole ecosystem of AI goods and services, from networking options to software, in addition to the GPUs that enable the critical processes of model training and inferencing. As investors tried to get in on this fast-growing company that has been dominating a rapidly expanding market, all of this has helped boost Nvidia's stock performance. Let's now examine the catalyst that will soon occur. On February 26th, Nvidia is scheduled to release its fiscal fourth quarter and full year 2025 financial results. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.